for me and hopefully some value for you guys too. I want to start by sharing what it is I want to talk about today. The first thing I want to do is I want to talk a little bit about the shift in our local market, specifically Cary, Morrisville, Apex. I want to touch on a specific market segment, specifically the 4-bedroom, 2 to 3 bath properties detached in our local market. And we're going to talk about what the inventory levels look like relative to the sales that have occurred, and what this means. Specifically, who are today's buyers, who are the people that are not buying, who are today's sellers, and who are the people that are not selling, and why. We have a short time to get it done in, but I'm going to try to leave it at least for 3 minutes worth of questions and answers at the end. And then I want to talk about an opportunity specifically for the brokers, but anyone who knows anybody that will fit the criteria that I chat about at the end, certainly a great referral for me. So let's start with the stats. If you take a look at your sheet, the very first sheet, if you have a pen, I'm going to ask that you just write some of these things in, because some of these things are pretty incredible. Area 5 and Area 10, Cary, Apex, Morrisville, 4 to 5 bedroom, 2 to 3 full bath, 0 to 1 bath. Currently, this is as of this morning, okay, currently under contract, pending a settlement, 42 units. Currently under contract contingent, which means that either in the opinion of the broker, there's maybe some things that still have to be addressed. Maybe an appraisal hasn't come back yet. Maybe they haven't finished negotiating through the inspections. But for one reason or another, they have decided to not yet change it to a pending status. 48. That's a total of 90 that are currently under contract. That's all price points. You with me? Mm-hmm. In the last 30 days, 127 transactions closed. 30 days. What does that mean?
You don't have any inventory.
There's 130 active listings. And we're closing 127 of them in a month. We have 1 to 2 months worth of inventory. 1 to 2 months worth of inventory. Obviously, as more property comes onto the market in the springtime, you'd anticipate that the numbers will start to improve. But we haven't seen these kind of numbers, frankly. I've been here since 1991. I've never seen these kind of numbers.
At least ratio, right?
Oh, yeah, in terms of the inventories. So the question is, what does it mean? Well, it means the most to the people that are looking at a particular price point or selling at a particular price point. So I've broke it down, and you'll take a look at these categories. Under $250,000, 5 houses that meet that criteria, under $250,000. Between $250,000 and $275,000, I'm going to go through these quick, 6. Between $275,000 and $300,000, 11. Between $300,000 and $350,000, 21. Between $350,000 and $400,000, 35. Between $400,000 and $450,000, 19. Between $450,000 and $500,000, 13. Between $500,000 and $550,000, 6. Between $550,000 and $600,000, 2. Between $600,000 and $900,000, 4. And over $1 million, the big goose egg. Now, one of the things I'd like you to know, for those brokers that are going to go behind me and check the numbers, no, these are currently active listings. On the number that starts the number, like if it goes 275 to 300, it's actually 275,001 when you plug it in. Because obviously, if you put 250 on both sides, it'll show up. So again, what does this mean? It means that if you're looking for a home today, you have a very limited selection. And don't be surprised if a large percentage of them have either steep driveways, yards that back major traffic roads, power lines, or some other issue that makes it difficult for the property to sell. So, in this market, we have to understand what's most important to what our buyers are. And frankly, for some people, they are better off waiting. Okay, the question is, what will they be waiting for? sense to wait for the right opportunity. If you're asking your broker to get out there and shake the trees, you might find that they can identify what it is you want, but they may have to knock on a few doors to do it. If you let them know exactly what it is that you're looking for, and you're clear on your timelines, it's a lot easier for your broker to get out there on the street and determine whether or not what's out there is suitable. Why are some people unable to buy? And a big part of it is the transformation in the mortgage industry. We are seeing more and more people that are forced to rent because of their circumstance. But just because they're forced to rent now doesn't mean they can't buy in the near or not too distant future. That's where you've got to have someone like Nevin and Bob that are willing to take the time to teach the people what they have to do to get their stuff cleared up. It's the only only way I see us transforming the way that buyers are now stuck renting. So you'd say, well, wait a minute, how is there so little inventory if there's so few buyers that can afford to buy? Who's buying all these houses? Investors. It is unbelievable the number of investors that are out there currently buying up property. And I'm going to pass around a report. It's called an Own America report. It's just a sample. It's an illustration of how investors look at deals before they make a decision, and I'll touch on that topic in a little bit. So, who is selling? Right now, people that are selling have the financial wherewithal to make the move, or they're trying to right-size their balance sheets so that sometime in the not-too-distant future, they can. That's pretty much what we see. There's not a lot of people that are eager to make a transition right now due to the uncertainty in the marketplace. So, at what point does it make sense for somebody to consider selling? Well, if they don't have enough equity in their property, they're going to be sitting. So, if in the past, in this kind of environment, when there were great buying opportunities, a person would make the move for a positive reason, either to buy more or to buy less, depending upon their circumstance. There's not a lot of things to choose from. If they have little equity, in fact, in some cases, negative equity, and few choices to look at, who is going to volunteer to put their house for sale? So don't let these statistics fool you. You will hear in the marketplace that this is a buyer's market from some people. You'll hear others say, this is a seller's market. The stats make it clear, according to tradition, that this is a seller's market. Am I not right? 1 to 2 months inventory, right? According to how appraisers refer to markets as sellers or buyers markets, we're clearly in a seller's market. But the reason why we don't see the inventory that we would expect is because people are not in a position to sell because they don't have the equity, or they're not excited about making a transition because there's nothing that they want to buy. The new construction properties are getting eaten up by investors for the same reason. Some of these investors are envisioning Fannie and Freddie's issues to continue. And their predictions are that as long as Fannie and Freddie are not going to be in the business and doing loans like they had in the past, this is a great opportunity as an investor to buy property and generate a 4.5% to 5.5% return on their investment, given the risks and the rewards. So, what's the opportunity? So this is the piece I want to touch on real quick. If you look at the next page, especially for the brokers, but really anybody who knows a property owner who would like to have their house sold, who hasn't figured out where they're going to go yet, may not be ready to make a decision. That is a great referral. A property owner who doesn't feel like they're in a position to show their home, either because of a pet or a toddler, that same person may want to stay in their home for a while if they have it sold. Ideally, it would be a single-family detached, preferably 4-bedroom, 2.5-bath minimum, but the investors are now considering 3-bedroom, 2-bath with bonuses and 3-2s on a case-by-case, and they're also considering townhomes. Most investors prefer, this is not the flip investor, this is the acquire for income. Most prefer no more than about $6,500 in deferred maintenance and or appliance selections. The seller has to be willing to sell at market value. The investors are not willing to pay a premium. They're willing to pay market, but they're not willing to pay a premium. They're cash purchases, so the closings can be at the seller's convenience. Ideally, the leaseback will be at a minimum ROI of 6%. We've seen them accept as little as 5%, but 6 would be a targeted number. Finally, I'm willing to schedule a one-on-one with any broker that has a circumstance like this and wants to know how to best structure the deal. That would be a great referral for me. And I am planning on doing a webinar sometime next week, so if either of you are interested, I'd be happy to show you the reports we're using, how we're presenting it. If it helps you put a deal together with somebody you've been talking to, be a great opportunity to satisfy our investor. Please eliminate the following: no steep driveways, no power lines, not on or backing any thoroughfare or other high traffic roads, no immediate impact from a railroad, and any other items that may materially affect the marketability of the property. Example, I had one that I was looking at yesterday. It wasn't but a stone throw away from the Cary landfill. It was close enough that, in my opinion, it would affect the resale value of the property. So given that the returns were right at the 5% mark, it just wasn't fat enough, pardon my French, to get the investor excited. I didn't even present it for that reason. So having said all that, what questions do you have? It's okay. No. I mean, I'm really excited to have the
I just want to make a statement. Yeah. I'm licensed in multiple states, and for people who do know me, those that don't, Seattle, Portland, Sacramento, LA, San Diego, Charlotte, here, they're all experiencing the same thing. There's no inventory. Investors are snatching them up, especially Sacramento, Bay Area, and Southern California. They're getting 10, 15, 30 offers on one piece of property, and a lot of them are cash offers.
Yeah, and these investors that we're talking about right now happen to be out of California. So
really not as cash.
Well, yeah, I saw more cash deals last year than I probably did in the other years, and I'm kind of, these are not professional investors. I mean, some of them have multiple pieces of property, but they're not like huge conglomerates. They're kind of but it's pretty interesting, pretty exciting.
I want to echo something that Scott said, because I ran very similar numbers to this for a client who's in a lower price range than what Scott was presenting here. Well, lower, smaller house in a different location, and the numbers are pretty even as far as inventory levels. I mean, we're looking at 2 to 3 months in some different price brackets, some different areas, but 1 to 2 in a highly competitive market like this area is. So it's tough right now. It's tough for buyers. Sellers are actually in a much better position today than they were a year, 2 years ago.
Are y'all seeing significant price appreciation because of that?
Yeah, we never did see we never saw significant price appreciation because there's always been so much new construction to keep that level down. So probably at the most we had 4% in maybe 2003 and 4. But
like right now, so you're not seeing these properties being bid up because there's so many people chasing them?
Well, you're seeing some of that, but you're limited because those people who require financing are going to have them appraised. And a lot of the investors, even when they're paying cash, they're having them